$847. That is the number on the screen at 6:47 a.m. Not $847 and change. Exactly $847. After you moved $34 this morning to make it feel cleaner. Rent is due in 11 days. Rent is $712. You do the math before you finish brushing your teeth. $847 minus $712 is $135. Across 11 days, that is $12.27 per day. You already know this. You have known it for 3 weeks. You are 23. You have been in Columbus your whole life. You make $20,400 a year at a retail job off Morse Road. That is $1,700 a month gross. After taxes, $1,391 lands in the account. Rent takes $712. Utilities average $87. Your credit card carries $2,300 at 24.99% APR. Minimum payment, $51. Of that, $47.90 goes to interest. The balance moves $3.10 per month, a low, constant hum of arithmetic running underneath everything. You get paid on the 15th. The 15th is 9 days away. Brianna texts about a concert. Tickets are $63. You write back, can't make it. She puts her phone face down, says nothing. You don't explain. You open a budgeting app. You close it. The numbers don't need an app. You have had them in your head for months. The screen goes dark. You don't turn it back on. The shift. You stop asking when it gets easier. You start counting in months, not feelings. 2 months before the credit card interest resets. 2 months before the lease renews. 2 months is the unit now. Everything else is noise. The number changes. The math doesn't. Money at $20,400 is not a planning problem. It is a timing problem. The first $1,000 saved does not make you safe. It makes you slower to panic. You are 26. The new job pays $47,300. After taxes and your 401k contribution, $3,089 lands in the account on the first of every month. You look at the number for a long time. Then you start moving the money before you can change your mind. $312 goes to the high-yield savings account, automatic, set on a Tuesday, then left alone. The contribution rate at work is 3%, $118.25 out of each paycheck pre-tax into the 401k. Your employer matches it dollar for dollar up to 3%. You have been leaving that match on the table since the Morse Road job. You stop. The first 401k statement shows $236.50. You look at it once. Your credit card balance is gone. Took 14 months. You paid $672.30 in interest to close $2,300 in principal. The day the balance read $0, you checked it 3 times. It took 6 seconds to feel like nothing in particular. You closed the tab. The interest was the cost of being 23. You let it mean that and nothing more. The emergency fund sits at $3,800. The target is $4,730. You are close. Being close to $4,730 does not feel the way you thought it would. Something that isn't relief, just the absence of a specific number that used to run underneath everything. Gerald refills his coffee in the break room. He mentions his Roth IRA the way someone mentions they take the highway instead of surface streets. He's 51, practical, offhand. He doesn't elaborate, doesn't look up. You write down Roth IRA on the back of a receipt. You look it up that night. The income limits, the contribution limit, the tax treatment. You don't open one yet. The vocabulary is expanding anyway. Your student loan is $287 a month at 6.8%. You pay it. You do not pay extra. The math on accelerated payoff versus investing the difference hasn't resolved itself yet. The shift. You stop thinking about money as something that arrives. You start thinking about it as something you move. The number changes. The math doesn't. You are 31. The offer letter says $92,000. You sign it in 4 minutes. The gross is $92,000. After taxes, $71,760 lands in the account across the year. $5,980 a month. You have never made $5,980 a month. It does not feel like what you thought it would feel like. It feels like a number that keeps getting used up. You increase the 401k contribution to 6%. The student loan balance sits at $17,400. You keep the $287 monthly payment. You are not thinking about the balance. The spending reorganizes around the income before you give it permission. The apartment goes to $1,340 a month. Not a luxury apartment, a normal apartment with a dishwasher and a parking spot included. The car payment starts at $487 a month. You needed a car. That part is true. The car costs $31,400. That part is less true. There are 11 subscriptions. You last audited them 9 months ago. The total is $163 a month. The grocery bill moves from $214 to $341. You eat better. You also eat the same. Your savings rate at $47,300 was 14.2%. At $92,000, it settles at 9.1%. The income went up $44,700. The savings rate went down. When you finally run the numbers, the rate is the first thing that goes still inside you, not the amount, the direction. You do not notice this for 7 months. Your sister texts a link, Cancun, 5 nights. She books 2 rooms and tells you about it the way someone tells you about a plan that's already set. She doesn't ask about cost. You don't correct her. You open your calendar. You block the dates. You start looking at cars. There is a model, $12,300 above what you currently drive. The down payment would be $8,000. You open your investment account. The balance is $23,614. You scroll to the transfer screen. You type $8,000 into the field. You look at the number. You close your eyes. You open them. The $8,000 is still in the field. Your index finger hovers. Then you close the app. You put the phone face down on the table, the same way Brianna did. You don't think about it. You make coffee. The shift. You stop measuring progress by what you earn. You start measuring it by what you keep. The number changes. The math doesn't. Income solves the survival problem. It creates the identity problem. $9,200. You filed expecting a refund. You had always gotten one before. The return came back owing. At this income, tax strategy returns more per hour than any additional work. You are 34. The director title came with $187,000. The $9,200 is not anger. It is something that reorganizes the way you read a pay stub. You find Marcus. He is a CPA who works out of a 2-room suite on the east side. He doesn't commiserate. He prints a 1-page summary, places it on the desk between you, and points to 3 numbers. He doesn't explain why you didn't know sooner. You leave with a list of 4 adjustments. The meeting lasts 41 minutes. You photograph the list before you leave the parking lot. The first adjustment, max the 401k, $23,000 per year, pre-tax. You are at 6%. The enrollment change takes 3 minutes. You raise it to the annual maximum. The second adjustment, backdoor Roth, at $187,000 gross, you are above the direct contribution limit. The strategy is 2 steps. Non-deductible traditional IRA contribution of $7,000, then immediate conversion to Roth. You execute it in February. You set it to recur every January. The third adjustment is the one you put off for 11 days. Your funds sit in an account your first advisor opened. Expense ratio, 0.87%. You move everything to index funds. Expense ratio, 0.04%. The difference is 0.83%. On the $143,000 portfolio, that is $1,186.90 a year the old structure was taking without a line item. You send an email. You don't read the reply. The fourth adjustment is a donor-advised fund. You leave it on the list. The student loan balance is $8,847. You pay it off in one transfer. The balance reads $0. You don't mark the occasion. The taxable brokerage receives $1,847 a month after maxing tax-advantaged accounts. The net worth counter crosses $200,000 on a Tuesday. You check the balance at 8:11 a.m. before a call. The number is larger than anything you have held before. It does not feel large. Something sits in the air with no name. You close the app. You go back to the meeting. You don't mention it. The shift. You stop thinking about money as safety. You start thinking about it as information. The number changes. The math doesn't. $847,000. That is what the taxable brokerage reads on a Wednesday morning at 7:03 a.m. You do not register it immediately. You scroll past it. Then you scroll back. You put the phone down. You pick it up again. The number is still there. The number is not triumphant. It is just there, the way a window is just there when you've stopped noticing it. The total portfolio is $1,230,000. The 401k holds $308,183. The backdoor Roth accounts carry $74,817. The taxable brokerage accounts for $847,000. You have been moving money in the same direction since you were 26. The portfolio does not know that. It just compounds. At a 4% withdrawal rate, $1,230,000 produces $49,200 per year. You are not withdrawing. You are still working. You make $214,000 now. The math for stopping exists. It is not complicated. The number keeps moving in its direction regardless. The $847 used to mean 11 days until rent. It meant $12.27 per day. It meant the 15th was 9 days away. It meant a low, constant hum of arithmetic running underneath everything, the kind you carry in your body rather than in an app. At $20,400, you could not see past the month. At $47,300, you could see to the year. At $92,000, you started to see to the decade. The view did not get clearer as it extended. It got quieter. $847,000 does not mean anything in the same direction. The number opens the same. $847. Then 3 zeros where the old meaning used to end. The weight is different. Or the weight is the same and you have grown around it. You are not sure which one. You have stopped trying to figure out which one. The distance between the $847 and the $847,000 is not a victory. It is not freedom. It is a kind of silence you do not have a name for. Quiet in a different register than the hum, but not louder. The arithmetic is still running. You have just gotten better at not hearing it. You still check the account in the morning. You still move the money before you can change your mind. You still count in months, not feelings. The number changes. The math doesn't. The next video is the 4% rule. This script showed you every level. The next one goes inside the one where the math finally starts working for you instead of the other way around. Subscribe. You're already in it.